Hello and welcome. In the previous lesson, we looked at the employment income and we looked at some of the benefits as well. We haven't completed all of the benefits because I said to you that list is quite big. So the list of benefits goes and goes. Right? So we will look at some more benefits today as well. We are looking at employment income, if you remember. Now, employment income is one component of income tax pro forma. Income tax pro forma is where we write non-savings, savings and dividends, and we write different components of income from which we can earn the income. One of the source of income is employment income. So we are studying employment income, and while we are working for someone, we get some benefits as well. So we are studying them benefits. They are the ones which are part of the remuneration package. We've already seen some of the benefits. Now we will see some more benefits today. Now, when you're working for a boss and the boss is quite nice, he can ask you, he can give you a car as well if he wants. All right? So he can, if he is too nice, he can give you a free car, or he can ask you to buy a car, and employer can contribute something to it. All right? So let's move to page number 10, please. Here you go. I've already shared the screen with you. On page 10, please. Right? On page 10, it says benefits number 8, cars. Now, cars are the benefits. So when you buy a car, when you're interested in buying a new car, so you went to the market, you inquired, the car costed £20,000. So then you thought, I don't have £20,000. I just got £5,000 anyway. So then you went to your boss, and you spoke to your boss, I was thinking to buy a car, but that is out of my reach. Then your boss said, all right, okay, I was planning to give you a car at a year end. So which car do you like? Then the employee said, I like a BMW. And the employer said, how much does it cost? He said, £20,000. All right, okay, how much you got? The employee said, I got only £5,000. The employer said, all right, okay, just give me £5,000. I'll go and get you a BMW. So that is the way it works. So if employee is getting car of £20,000, but how much he is paying for? £5,000. So the benefit is £15,000 which he is getting. All right. So it could work that way. But to calculate the benefit of the car, as far as employment income is concerned, it depends on how big the car is and how environment friendly the car is. So the green cars. So green car means environment friendly cars, not the color green, but the environment friendly cars. So when you have a car which has got less carbon dioxide emissions, which is environment friendly, will have less tax to pay, and which is not environment friendly will have to pay more tax on that. Now on page 10 it says benefits of cars. Now the formula to calculate the benefit of the car is given here. Now you take the list price. Now list price is the market price of the car. Like in my case, I give you the example of £20,000. So you take £20,000 and less capital contribution. Now the capital contribution is the amount which you contributed. How much did you contribute in our example? In our example, you contributed £5,000. All right. Say for example, if you would have contributed more than £5,000, but doesn't matter. Even if you have contributed more than £5,000, maximum you can put in the formula is £5,000. Now look at your notes now. It says amount contributed by an employee when the car was purchased. In the note it says maximum figure £5,000. Now even if you contributed £10,000 towards buying your car, maximum you can deduct is £5,000. You cannot deduct more than that. Alright. Now after doing that, you will have to multiply it by 14%. Now what is this 14? 14 is a percentage. The standard rate is 14%, but it will vary. It will depend on the carbon dioxide emissions of the car. Now, carbon dioxide emissions of the car will be given to you in the exam. So the question will say the car has got 130 kilometers carbon dioxide, so 130 grams. So it will be given to you in the exam. Excuse me. So it depends on the carbon dioxide emissions of the car. So if it is 5 grams, then it will be, if it is 50 grams, sorry, If it is 50 grams, then we will write down 5 instead of 14 in the formula. Alright? If it is if it is 51 to 75 grams per kilometer, then we will write 9 instead of 14. Or if it is from 76 to 94 grams per kilometer, then we will write 13 in the formula instead of 14, which is given. Right? So if it is more than 94, say for example 95 grams, then we will write 14. Alright? What we'll have to do is we'll have to add something to it. What we will add, we'll add grams of car. So how many grams are they? Say for example 95 grams, or say for example you can say 130 grams. Alright? So we will take the grams of the car, which will be given in the question, CO2 emissions. We will deduct 95 out of it, and we will divide it by 5. So whatever it is, we will take that. Alright? But say for example, if the car is diesel, there are two types of car, you know that. One is a petrol car and other one is which is run on diesel. So if it is a diesel car, we will add 3% extra into it. And if the car has been provided for less than a year, say for example 10 months, then we will take 10 months over 12. It says in the formula months over 1. It is not 1, it is months over 12. Please make sure you rectify the formula. It is months over 12. So if the car is available for less than 12 months, it will also tell you in the question, if the car is available for less than 12 months, then you will have to multiply it by months divided by 12. Now in this formula, if you look, it might feel a difficult formula, but it is very, very easy formula, because everything in the formula will be given to you in the exam, but only thing you will have to memorize is the formula itself. So list price will be given to you, capital contribution will also be given to you, CO2 emission will be given to you, by which you can determine how much to write instead of 14, or you should write 14. So 14 plus grams will also be given to you, less 95 divided by 5, and it will also tell you if it is run on the diesel or petrol. If it is petrol, then that's fine. If it is run on the diesel, then you will add 3% extra into it, and it will also tell you how many months has the car been provided for. Alright? Just beneath that it says maximum 30%. Now the percentage this result will come in the percentage. So it will be either 30 or 40, or it could be 25. So the maximum you can take it to is 37. So it will go maximum to 37. It says beneath that as well. So maximum you can take it to 37. Alright? And in the note it says other benefits associated with the car, which are insurance, repairs, maintenance, vehicle license, are exempt. Right? The next one, it says fuel for cars. If as far as fuel of the car is concerned, we will take standard. This is the formula to calculate the fuel for the car. If standard 22,100, and we will multiply it by the percentage. Now which percentage is it? The percentage which you have calculated above. So that will be the percentage. The maximum percentage can go to 37%. So if it is 40%, your answer is coming as 40%. After doing them calculations, then maximum you can do is 37%. You will reduce from 40 to 37. All right. Now after that, it says, excuse me. So fuel for cars is 22,100 into percentage multiplied by months of 12. It is provided for less than 12 months. In the note it says contribution by employee of private use is not deductible. So if employee has contributed for private use for the fuel, it is not being deducted. Now use of other assets, say for example furniture, computer, TV, whenever employee is using any other asset, you will just take 20% of it. That is straight, and that will be the benefit. And if the asset is provided for less than 12 months, then you will multiply by months over 12. That's what you always do. Alright? So we'll multiply by months over 12. If you look at the next page, page 11, it says other assets provided for use. Now this is benefit number 11. Other asset provided for use is subsequently purchased by employee. Now say for example, if my boss has given me, AccountancyTube boss has given me this iPad to use in the during lectures. Now I was using this iPad. Then after that, I said to my boss, I want to buy this iPad for my private use as well. Then in that case, what would be the benefit? How it would be calculated? Now, there are two ways to calculate it. we will check in both cases, and the benefit will be higher of these two. So what are those two ways? First one is take the market value of the asset when sold to employee. Now, although my boss has bought this one brand new, but when he has given it to me, when I will be buying it, say for example, if I buy from 6 months from now, its value will be less than market value. So when I will buy it, I will speak to my boss, I want to buy this iPad, then we will go to market, we'll check the price of it, what is the market value. So we'll take that market value and say for example market value was £500 that time, then I will say I will give you £300. I will say to my boss, I will give you £300. Now I am paying £200 less than market value, and that £200 will be my benefit. That is way number one. So you take market value of the asset when sold to employee, and you deduct price paid by employee. In the second case, market value of asset when first provided. Now we will take the value of asset, value of iPad when it was first provided to me. Now when it was first provided, it was valued at 700 quid. So when it was £700 when it was first provided, then what we'll have to deduct is, we will have to deduct what we have paid the tax on, how much we have tax paid on it. So we know that other assets, this is other asset, so we pay 20% every year. So I have paid 20%, say for example, couple of years. So we will take 20% every year. So we will take what we have paid tax on it, how much we have paid, already paid, and I will also deduct price paid by the employee, right? So whatever I am paying for it, I will also deduct that. So we will take the market value when it was first provided, then how much tax we have paid, we will deduct that as well, and how much I am paying for it, that we also deduct. So there are two ways. This was the second way. So whichever results the higher, we will take that one. All right. Now the benefit number 12 is approved mileage allowance. Now approved mileage allowance, this is allowance which is given by HMRC. The table beneath that, this table will be given to you in the exam. This says cars, motorcycles, and pedal cycles, and first 10,000 miles, and then it says above 10,000 miles. Now this table will be given to you in the exam. Now this is the limit which is allowed by HMRC. Now HMRC says, say for example, if you are working for this company, AccountancyTube, and I have a car as well, and I am using my own car, if I am using my private car to use it for business purposes, my boss is saying, all right, you are using your own car for business purposes, I will give you some amount towards the fuel. Now if my boss is given £1 per mile or 50 pence per mile, now we will have to see if it is allowed by HMRC or not. How I will see? I will calculate the total miles driven in a year, and I will multiply it by what my employer said to me he will pay me per mile. Say for example, if I have driven 10,000 miles in a tax year, and my boss said I will give you 50 pence per mile, so total will be £5,000. All right. Then that is what my employer has paid me. Now what is allowed by HMRC? Now this is the criteria which is allowed by HMRC. HMRC says for first 10,000 miles, if it is car, first 10,000 miles, 45 pence per mile is allowed, and above 10,000 miles, 25 pence per mile is allowed. All right. Now in my case, my benefit was £5,000. What was allowed by HMRC? Now HMRC said allowed is 4,500, because it is 45 pence per mile. So we'll take 5,000 less 4,500, that will be benefit. Now up to approved mileage allowance, it says our exempt, excess is taxable, like I said. Now if this employee receives less than approved mileage allowance, that will be deduction, and we will deduct it out of the benefit. All right. And in the beneath that it says the formula as well. So allowance paid by the employer less approved mileage allowance, and if it is positive it will be benefit, if it is negative it will be deduction. All right. Next one, number 13, it says the beneficial loans. Now if I'm working for this company AccountancyTube, I might go to my boss and when I need some money, I will say to my boss, I want some loan. Now official rate of interest, whenever the word official rate comes into ACCA P6 or F6, official rate of interest is 3%. It will also be given to you in the exam paper in the tax table section. So let's come to the example again. So I went to my boss and I asked my boss, could you please lend me some money? Could you please give me some loan? Boss said, all right, okay, official rate of interest is 3%. I will give you loan at the rate of 2%. So my boss is giving me a loan less than market rate, all right, because I am working for this company. So in that case, if I'm taking that loan, which is I am paying interest less than market price, that is called beneficial loan. Now, it is less than market value interest which I'm paying. That's why it is benefit, because I'm getting benefit because of my employment. If someone else comes to my boss who is not employee of AccountancyTube, my boss ain't gonna give him loan less than 3%. He might give more than 3%. But because I'm working for this company, that's why he said, all right, you're working for AccountancyTube, I'll give you loan at the rate of 2%, which is less than market value. All right, so market rate. So in that case, it is benefit. Now, how to calculate the benefit if I get beneficial loans? It says in the notes, it's benefit number 13. Interest. If the employee pays interest to the employer less than official rate of interest, taxable amount is calculated as using either of these two methods. Now, there are two methods to calculate. One is called average method and other is strict method, or relevant months method, we can say it. You can say it accurate method as well. Now, before we take these two loans, let's look at the thing which is written just beneath that. It says, if the loan is £10,000 or less, then there is no benefit at all. Now, if my boss has given me £10,000 worth of loan, and even if it has given me interest free or 1%, then there will be no benefit. However, if it is more than £10,000, then the benefit will be calculated using either of these two methods. All right. If the question is silent, then we might choose the lowest one of these two. Obviously, you will appreciate the fact that if you're an accountant and you want to pay tax, you will pay less tax, obviously, in a legal way. So you will take lower of these. So first one is called average method. In average method, we take highest outstanding loan in a tax year, and we take lowest one and we divide it by 2. So that will be average. All right. So if it is average, then we will take the months over 12 if it is less than 12 months, and we will multiply it by official rate of interest. But what we will deduct out of this is what interest actually paid. So first one is official rate of interest, and then what we have already paid for it. Now, highest loan during a tax year and the lowest loan during the tax year, you might confuse yourself. What is it? Say, for example, if you took a loan of £10,000 at the start of the year, then you said to your boss, I will pay you £500 a month. So at the start of the loan term, your highest loan was £10,000. Then you started to pay gradually. Then your loan becomes lower and lower. All right. So when the loan becomes lower and lower, then we will see whole year. What was the highest? It was £10,000. Then after 7 months, your lowest loan was, say for example, £7,000. So we'll take highest during the tax year, and we'll take lowest during the tax year, and we will add them and we'll divide by 2. That will be our average method. And we'll take the official rate of interest, which is 3%, and we will see how much we have paid, how much interest we have paid. So what will be the net amount will be benefit. The next method is strict method. It says balance of loan outstanding in months. So we'll take how much is outstanding in every month, and we'll multiply it by months over 12 and by the official rate of interest, and then what we have actually paid for it. And if these are two methods to calculate the benefit. If the question is silent, then we'll choose the lowest one. If the question says something, then we have to stick ourselves to that. Right? Now, next page, if you come to the next page, which is page number 12, the benefit number 14, please. It says vans and heavier commercial vehicles. Now, the benefit when the van is used by the company, so for example, if I use a company van of AccountancyTube up to 3150, it will be exempt. And if it is over that, then the annual charge, scale charge is 3150. So whatever the value of the van is, maximum I can take is 3150. So it will not be more than that. Say for example, van's value is £10,000. So the maximum I can take is 3150. As far as fuel of van is concerned, maximum I can take is 594. So the maximum will be 594 multiplied by months over 12 if it is provided for less than 12 months. Mobile phone, benefit number 16, it says, now the mobile phone may be provided more than, employer may have provided you more than 2 mobile phones. So the cost of one mobile phone is exempt, cost of second and subsequent mobile phones is taxable. How can we calculate the tax? We'll take 20% of that, and if it is provided for less than 12 months, we take the months over 12. Then it says running cost of mobile phone. The first mobile phone's running cost is exempt, and the second one and the subsequent will be taxable. Number 18, it says bicycles. Bicycles are exempt, and if I buy the bicycle, if the bicycle is provided to me, it will be exempt. Now, if I buy the bicycle from the boss, like I give you the example of this iPad, if I go to my boss and I ask him to buy, I want to buy this one, then my boss will say, okay, go to the market, check the market value of this iPad, and I went to the market value was £500, then I give my boss £300, so the net benefit is £500. So that is benefit number 19. It is exactly like the one I told you. Alright? Now if you come to benefit number 20, please, it is entertainment provided by third parties. Now this is also exempt. Third party means not your employer, someone else. Then it says 21, non-cash award for long service. So if I've worked for any company for more than 20 years, not less than, more than 20 years. So if I have been working for more than 20 years, then whatever the non-cash award is given will take up to £50, multiplied by number of years, and that will be exempt, and excess will be taxable. So if it is more than £50 a year, then that will be taxable. Staff parties, number 22, cost per member is £150 is exempt, and if it excess whole amount is taxable. Then 23 is a staff suggestion scheme. Staff suggestion scheme is a scheme which is introduced by the bosses, whereby you can give your boss some suggestions. So if it is £25, that will be exempt. If it exceeds that, then excess will be taxable. So staff suggestion schemes means if I give any suggestion to improve the company, to the improvement of the company, or to better performance of the company, and if my boss likes that suggestion, he might give me 50 quid. If he gives me 50 quid, only 25 is exempt, rest will be taxable, because only 25 is exempt. Employee attending full-time course on employer's expenses. If your boss says, if you are working for a company, and if your boss says, if you want to study, and I will pay for your course. Now that will be full-time course. If it is full-time course, 15,480 is exempt, and if it exceeds, then all amount is taxable. Now, sporting and recreational facilities provided to employees, not to general public. So if there is any sporting facility provided to us, like outside this studio, we can play lawn tennis as well. There is a ground. So that is only for the staff of AccountancyTube. If it is provided to general public, that will not be exempt. If it is just for the staff, that will be exempt. Number 26, it says, from 26 to 32, these are all exempt. Please read this one too. Alright? These are easy peasy. Alright? Now if you come to 33 of this one, next page, on page 13, employer provided uniform, this will also be exempt. Now employer provided uniform is simply like mine one. Say for example, I bought this suit for 150 quid, and I bought 3 of them to use in my lectures. Now although my boss paid for it, but it will be exempt benefit, and I won't pay any tax on that. Number 34, it says employer contribution for additional household incurred by employee working partly at home. Say for example, if I have to make some notes, and my boss said, when you go home, could you please make your notes? Then I said, all right, okay, but it will cost, I will use my electricity and lighting and heating. And my boss said, all right, okay, I will pay you for that. And that bit will also be exempt. Number 35 is important. Please make sure you write it down as important. It says childcare allowance. Now, childcare, you know that when government pays someone to look after the kids, that is called childcare. Right? Now, childcare is amount which is paid by government. Now, there is some amount which is taxable and some is exempt. Now, if it is £55, and it depends on how much more are you earning. So, if your salary is in the basic rate band, now you know the bands. we have made the bands. If you remember, if your salary is in the basic rate band, I'm talking about the salary, I'm not talking about the total earnings. Please make sure you check with the salary. If your salary is in the basic rate band, then up to £55, multiplied by number of weeks is exempt, excess is taxable. If you're a higher rate band, £28, up to £28 is exempt, multiplied by number of weeks, and excess is taxable. If you're additional rate band, then £25, up to £25 is exempt, and excess is taxable. But please make sure you check with the salary, not with whole earnings, right? So if your salary is in the additional rate band, then £25 per week is exempt, excess is taxable, right? Transport overnight cost will be exempt. Gift of goods from third party, £250 or less is exempt. If exceeds all amount is taxable. Eye care test will be exempt. Medical treatment up to £500 is exempt. If it exceeds all amount is taxable. Residual charge, please make sure you note it down as important. Now we've learned all the different rules for different benefits. Now it does not cover each and every bit, does it? So if it does not cover each and every bit, something might pop into the question which you haven't seen in these notes. So which you haven't seen any rule for that. So if you haven't seen any rule for anything, then rule number 40 will come there. Now rule number 40 says taxable amount to the benefit to the cost of employer for the benefit for which no specific rule is available. So if there is a benefit for which no specific rule is available, the benefit will be cost to the employer and it will be added in the salary. All right? Now that is it for now, because we have already covered all the benefits. In the next lecture we will look at the allowable deductions, and that will be our allowable deductions, because you have seen we take the salary and we add some things into it. We take the salary, we add bonus, we add benefits, we take allowable deductions. Now we will see what allowable deductions we can deduct in our next lesson. Alright, that's it, and I will see you in the next lecture. Thank you and goodbye.